Yes, so guys, in this video I'm going to show you how I was able to catch this sniper entry on volatility 75 index, and I was able to raise this one USD up to where it is, and as you can see, I'm targeting a very big move of around $7 in each position. Now guys, I'm going to show you step by step how I was able to catch this move, and I'm going to do my top down analysis from the higher time frame to the lower time frame using smart money concept and the ICT concept. Now I'll start by hiding my positions so that we start analysis from top from the higher time frame to the lower time frame, where we will be getting our confirmation. Now we are going to start with the weekly time frame. We all know that our time frames are very many, and we will start with the weekly time frame. And the weekly time frame is whereby we are able to see the bias of the market, and we'll be able to know also the interest points, whereby we are able to see the market react. The other thing you need to see on the weekly time frame or the higher time frame is the formation of the market structure. And as we can see, the market on the weekly time frame or the higher time frame, it is giving us a downtrend move, as you can see. And this downtrend move is going to give us sell entries. That's what we are going to look for. We are not going to concentrate more on buys, because on the higher time frame we have the sell move. Now let's chip into the analysis so that we see how the market is behaving, and I'm going directly to the analysis so that we see how it is actually behaving. So on the weekly time frame, you can see how the market is behaving, and the first thing I'm able to spot here is there is a break of structure, and I'm going to insert that break of structure, as you can see. Sorry guys, I'm going to use my phone to do my analysis. You can see there is a break of structure. Sorry, I'm making these lines to be a bit straight, as you can see. That's now what I'm talking about. That's a break of structure. That's the first break of structure that we can see. So after that, you can see the market tried to go back to the range, but it didn't reach on the discount, or rather the premium zone. When you take your Fibonacci and drag it from there, from the old high to the lowest point, you can see the market only retraced up to the discount. It is still within the not the discount, it is still within the premium zone. It did not go up to the premium zone, where we are supposed to look for our sales. And so what made the market to react on the at the equilibrium zone? There was this order block here. You can see this weekly order block. This is one of the point of interest that we are looking for. You can see even the these rejection candles here can tell you that this point is actually strong to make the market to move to the downside. Okay, now that was our weekly order block, and the other thing I can spot is we have the buy side liquidity. This is where we mark our buy side liquidity, and allow me to use my phone so that it will be very easy for us to see how the market is behaving. Okay, so that's our that's our buy side liquidity. That's our buy side liquidity, and then we also mark our sell side liquidity. So the market is within the buy side and the sell side liquidity. So that's where we are seeing the market standing. Okay, let's see how the market continued reacting. Okay, now we have the buy side and the sell side liquidity, and we have seen the market retraced back to react on the weekly order block. Now let's move to the daily order block, daily time frame, sorry, or rather. So on the daily time frame, at least now we can be able to see how the market is aligning itself. And on the daily time frame, you can see the bigger picture of the market, and you can the things now you can notice on the daily time frame is a very huge imbalance, and this imbalance is being created by a series of fair value gaps which must be filled before market decides to go on the decides to go to the buy side liquidity or the sell side liquidity. It has to come down and fill those imbalances. The other thing I can notice here is we have sell side liquidity on the daily time frame. You can mark it so that you are able to know where you are. Let's see. That's our sell side liquidity on the daily time frame. So after that, what else can you spot? What other point of interest can you spot on the daily time frame? The other thing I can spot on the daily time frame is something we call rejection block. This is a rejection block, and this rejection block is marked using a trend line, or rather a support or I mean as a resistance zone, which is there. Let's see, that's a rejection block, and you can see this is a point whereby the market reacted for some time. You can see the market reacted on at this point, and also you can see the market also reacted at this area here, and you can see now the market on the other side, it reacted around that point. So this is a very clean rejection block, and now it's a very nice point of interest. So on the daily time frame, if we zoom clearly, what else can we see? I think let me remove the rejection area so that we are able to to get a clean chart. So on the daily time frame, what else can you see? There is a wipe of liquidity. You can see on this area here, this is a very clean wipe of liquidity. That's a very clean wipe of liquidity. Let me show you using my arrow. This one is a clean wipe of liquidity. This is because this was a higher high, and then market retraced back and then came back to break this higher high to the upside, but it left a wick. So it just took this liquidity, the liquidity that was lying here, and started exclamating to the downside. So after that, we can now be able to move to the lower time frame, which is 4-hour time frame, and see how the market is behaving. So you can see now our wipe of liquidity is now visible, and we are able to know where the market is higher. Now we have our first change of character. Now our change of character is now seen at that area there. That is our first change of character. Let me make that line a bit straight. That's our change of character. Yes, that's our change of character. It's a bit tiny, it's not very visible. That's our change of character. So when you get a change of character, what do you think of? You think of market shifting, is now shifting. It's no longer bullish, it's now shifting to the downside. And after this change of character here, what did the market do? The market went back to the range, and it respected what? Our 4-hour order block. This 4-hour order block, I can mark it using my zone here. That is our 4-hour order block. And our 4-hour order block, it is still in line with what? It is still, when you zoom on the daily time frame, it is still in line with our daily order block. You can see it over there. So those are two reference points that we are going to rely on. Let's go back to our 4-hour time frame. You can see our 4-hour time frame is giving us that order block. So that was a very nice point of interest, which could have given us a move from here, and then maybe we target to this lower low here. That could be our very good move. Now the market did a break of structure again. It gave us another break of structure, and after giving us that break of structure, what did it do? It gave us a break of structure. Let me mark it. That's our break of structure. That's our break of structure, and after giving us that break of structure, it went back to the range, and as it went back to the range, it went taking all those liquidities. You can see there is a raid there. There was some form of liquidity or break of structure around that area. You can see it went taking those liquidities. You can see another liquidity over there, and then you can see it grabbed the last liquidity around that point. You can see, I think I can make that line a bit straight so that we are able to see the liquidity areas where they are. So you see, so that's our liquidity areas.
And then after that, which is the reference point did it react on the 4-hour time frame? It reacted on the 4-hour breaker block. That's our 4-hour breaker block, another reference point, which is very, very important, and it gave us that move, as you can see over there. You see, this is a very, very nice move, and I think I forgot to enter this trade here. I was supposed to enter this trade, but I was a bit busy and I forgot to enter that trade around this point. But either way, I was able to catch this trade halfway, because I know that this trade is going to move to the downside, and we are going to be heading to the lower side, or rather sell side liquidity. Now let's see what the market did on the lower time frame. Now you can see where we are right now, and the market is still pushing to the downside. So let's move to the 1-hour time frame. On the 1-hour time frame, you can see there is nothing much that is happening, because the market just gave us a little retracement. As you can see, the market gave us a retracement, and we can see it is still pushing to the downside to continue heading to the lower side liquidity. Let's go to 30-minute time frame. On the 30-minute time frame, what I can spot here, I can spot a tiny break of structure. You can see that's a break of structure, and then prices continued going down, and it had to do a little bit of wipe, and then went back to the range. Now I think we can zoom a little bit on the lower time frame, that is a 15-minute time frame, so that we see a little bit of market structure, how the market is behaving, and how we are able to catch that move. Now after getting this break of structure, before we got this break of structure, you can see what the market did. The market had already raided this high here, so it had already taken that liquidity. There was a wipe of liquidity, and after that wipe of liquidity, it makes that high to be a protected high. This is a protected high. It is now a protected high, because already it grabbed that tiny liquidity over there. Now the prices continued going down, and you can still see there was a bit of break of structure over there. That's a break of structure. And then the market continued going down, and it gave us a last tiny internal break of structure. You can see it over there. You can see over there. I'm just trying to make this video a little bit simple, despite the fact that I'm using my phone. Now as we continue now, you can see what the market did. It came and gave us a form of liquidity over there. This is what we call trend line liquidity. And so my setup was that I was to wait for the market now to come back, and then respect to this order block over here. So this is where my entry was supposed to be. So and that is after the market came and took these trend line liquidity, and so I waited for the market to take this trend line liquidity and then to take all these imbalances over here, and then to respect my 15-minute order block. And you can see that's how the market behaved. So as you can see, I waited patiently for the market to react up to that area, and then I placed my sell limits. I placed my sell limits around this zone here on the 15-minute order block, and then waited for a confirmation whereby I was able to enter that trade, and now the trade is headed to the downside, and we are now targeting to the sell side liquidity, and our sell side liquidity that we are targeting is on the higher time frame, which is the 4-hour time frame. This is our major sell side liquidity, and the internal sell side liquidity, we can spot it at a lower time frame, and our lower time frame sell side liquidity is on the 30-minute time frame. So the market is still pushing to the downside, and we are hoping that the market will still respect our setup up to where we will see it heading to this the major sell side liquidity. So my entry was at 15-minute order block. That's where my entry was, and you can still see we are moving quite well, and we are hoping that the market will still continue respecting our setup, and we are going to make some good cash. So let me now return my positions so that you see the progress of my trades. In my account, I only had $1, as you can see, and the progress is doing very well, and I was able to put a few positions, only 3 positions, and now you can see we are headed well, and my take profit is at the major sell side liquidity, that is on the 4-hour time frame. For at least it's able to be seen clearly at the 4-hour time frame. Now that was a very nice setup and a very clean setup. You can see how the market behaved. It just tapped on our sell limits, and now we can see it's moving very nicely and very smoothly towards our sell side liquidity. Now guys, that's the end of my video, and I would like you to subscribe my YouTube channel so that I'll be able to post more videos of the same analysis, and I hope it will continue helping a few individuals. Anyway, thank you guys. Let's meet on the next video. Thank you.